Good evening, everybody. Johnny Seville from Acorn Wealth here, and this is your executive summary for stock setups for the 27th of October. Now, sorry, it's a little bit late tonight. I've actually been working on this for probably a good 6-7 hours. So we'll see why when we start going through the data, but we will be getting these out to you earlier than this. But tonight's quite an interesting night because I thought, hey, this will be easy. We'll record a quick executive summary and get it out. And then I started going through the scans, and the interesting thing that I noticed here, and maybe many of you who ran your scans this evening, is that there were a lot of shorts. Now, I ran the my Fallen Angel scan. I had 4 or 5 stocks. I ran the bullish breakout scan. I got 3 stocks. Now, you'd think that would be different when we obviously are into breaking into new territories. So this kind of I thought was a little odd. So then I went and ran my short scans. Now, when I ran my capturing the crash, one of my capturing the crash scans, and I create a lot of them. Now, one of the key ones I use, came up with 80 candidates. That is for basically a bearish flag formation. There were 80 stocks on that list. I then ran another one of my crash scans, and I got 40 stocks on the list. So what I've been doing is I've actually been going through all 120 stocks, looking at almost every single one of them's insider trading, P/E ratios, earning announcements, and shortlisted those. So attached to your email, you'll see my research. I've just taken a photo with my iPhone of what you can see I've done. And if you look at that photo, you'll see that in one column I've listed where the earnings are. In the next column, I've noted whether there's been insider trading, and 2 ticks means substantial insider trading. If the Twigs money flow is working in our favour substantially, the risk-reward ratio on stock trades, and then entry-exit stop-loss notes, as well as the put options we may be looking for. So there's something there for you to look at if you want to have a visual reference. We'll try to get those into email format, but wanted to get this out to you as quickly as possible. All right, so having a look at the S&P 500, we've obviously rallied up. We've gone into the broken through the 200-day moving average. We're still basically holding beneath the 77.7 Fibonacci, and we're just right around that zone where we broke down from originally. Now we've got a few days ahead of open range. So that's going to be another key thing to watch as well at the end of the week. Now, what I wanted to bring to you tonight was basically a list of different stocks that we're looking at, and I was looking for longs, but a lot of them actually are shorts. So again, I wouldn't be getting heavily bearish ahead of open range, but for those of you looking for possible trades or earnings plays, this might be a good little watch list for you. Before we get into that, let's have a look at. Let's have a look here at the Dow Jones Global Index. You can see this has not been as bullish by any means in terms of if you look at the worldwide trend. So still, this is actually lagging behind a little, where normally it's leading in terms of bullish. So that's one thing to note. We'll have a look at some of the stocks we've been following. QLIK, which was something we'd alerted people to look at the $32 January puts, up big time. So they're up from $1.25 when we made the alert to $2.95 was the close price today. So up about 250% roughly. So big win there for anyone who's holding those. And as you can see, it just went straight through. On the stock trade, we also suggested a potential profit taking there at 34. But either way, those were a big one, depending on how you played it, options or stock. MR, let's have a look here. Yeah, that's all from the notable things I wanted to mention on the stocks we're currently following. So let's switch over to my watch list. So here are the potential plays. A lot of these are earnings plays. MRD is one of those. Now, obviously, we can see significantly divergent money flow. We've got insider transactions in terms of the sell side. So we'll just bring that up here. So there we go. We can see we've got good insider transactions to the sell side, broadly spread all around that $20 mark, and of course we're right under there. So they're heading into an earnings they report on November 4th, which of course is next Wednesday. So something to watch, and I'm looking for that to break down below 1673. And I look at that's be my entry. My exit would be $15.33, and my stop would be $17.53. So just under a 2-to-1 risk-reward ratio. I'd also look at the December $15 puts, which are currently 45 cents. I'd take a jump at those. So that was one that I liked. Obviously, MLM is something that we're already following. But that looks that's still just kind of getting closer to its trend line. We're looking for the break of that trend line, which is now really at 143.09, due to a drop down to 123.09 is what it looks like now. With a stop loss I put in at 150.43, and the puts on those I'd look at as the April 135 puts at $7.70. Now here's an interesting one, Nu Skin. Now this was obviously a short from last week that stopped out, and I mentioned, look, it's probably going to run into $40 now and retrace. So I said, look, this is where we maybe look at a short if it hits that, and then play the breakdown. So anyone following that trading mentality would have been in today. If you're not, it's still not too late. But this would now, they've just adjusted their earnings announcement to be not on the 5th as it was originally expected. They've now changed that to aftermarket Thursday, October 29th. Apparently that's due to a scheduling conflict of their directors. So it seems a little interesting to me, considering that breaking down into some really dangerous territory technically. If you look back 4 years of charts, you can see where we're currently at is really kind of starting to hit some all-time lows. So we throw a line down here. This might be okay. So we look at the low of that candle, and we zoom back in. You can see that basically comes down to where the stock appears to be dropping to, which is at $32. So NUS could be an interesting play. The $33 puts that expire at the end of the week are 55 cents, but playing a bit more conservatively, you're looking basically at March. $30 puts are $3.20. So that would, but basically the way I've calculated the possible zones is a break of that all-time low, or that recent all-time low, down to these Fibonacci extensions. So speculative play into earnings, but obviously had a big turn today, went from 744,000 to 1.47 million, broke that upward consolidation channel, that rising wedge. Okay, CVE. So short-term target on the NUS, by the way, is 28.57. Longer-term target 22.67. What I would be using as a stop loss would be I'd be looking at $40.30 as a stop. So basically 3-to-1 risk-reward ratio from where we're at down to 28.57, 5-to-1 risk-reward ratio down to 22.67, and of course the options are a little bit different. So yeah, so back to CVE. Energy, a lot of energy stocks starting to look bearish. This one's rolling down. No insider trading, no earnings. So this is one of the, just kind of more of a momentum trade. Looking at an entry criteria around 14.66, an exit of 12.57, and a stop around 15.66. Basically looking at that to just drop down to its shelf of support down the bottom here. So money flow obviously turning negative. MKTO. Possibly a bear flag scenario. Great twigs. Insider selling. They report on November 11th. And this would be just a small little grab from 28.17 down to 25.83. So just a quick, $2.50 grab, and I'd like put a stop loss criteria at 29.43. So basically, it's a 2-to-1 risk reward ratio. Options, I'd look at the $25 April puts, which are $1.95 at the moment. Okay, ADPT. Now, I've got a star. Some of the ones I've got stars next to were the ones that I found particularly interesting. NUS I had a star next to. ADPT I had a star next to. This one has good insider selling. Let's just bring that up here. ADPT. These are in the medical services industry. There we go. Come on, old fella. Yeah, there you go. Some sizable transactions, bang, coming in right around $80 and $100. Big transactions. So we go to the stock. You can see we've actually also got a head and shoulders with a falling neckline. So I like this one a lot, and this one could easily drop to around that $40 target. So on this one, I'm looking at an entry criteria around 66.50. But basically, I watched in the morning. I think this is a high probability trade. I'd look at an exit target of 42.33. So we're looking at basically $24 potential drop. And the options I'd be looking at, stop loss would be 72.79. But I wouldn't put that in until after tomorrow, because it's got a bit of this whipsawing volatility. I wouldn't want to get caught in. I don't want to let the stock get its momentum first. The puts I'd look at are $55 February puts that are $5.65. So if this drop occurs relatively quickly, I mean, add $25 onto that, you're looking at selling it somewhere around, say, $30. So you may be looking at basically a 5 times or even 6 times potential reward. So like this one, and one of the ones that kind of caught my eye. Okay. CRR was one I've written down. I do have a start next to it. It's an earnings play also. So this one is purely earnings. It seems to be breaking down beneath some key support. And CRR, that level there, you can see that I've drawn the line at this line here. Right, if we go back, you can see that's an all-time low for CRR, basically right back into 2001 days. That was a level that held up in 2002. We've broken beneath that, so this could be in trouble. So CRR could have a decent drop. I'd look at the June $12 puts, which are currently $1.60. GIL. This is a active wear. Now these are these are part of the Dow Jones International Sustainability Index. So whatever that means, they've had a good run. You can see these are up from in March of '09 at $2.68. They've run up to $36 almost, and they're engaged in apparel stores and so forth that are run throughout North America and South America and Europe. Now. Couple of key things, obviously, that could be very interesting, is that those countries, a lot of those are in trouble. And you can see that these guys are shaping up with a sharp drop at the moment. Money flow is completely wet the bed. So I'd be looking at the June $22.50 puts, which are at 90 cents currently. Strangely enough, the March are only 80 cents. So if only 10 cents more, you're basically getting the June expiration. So June 22.50 puts currently 90 cents. I like those puts, and that's how I'd basically be looking at that one. Okay. Now those are some of the best ones. The last two that I have on my list is MMI. This is an earnings possible trade. It's not as clear to me though what this pattern is as much as some of the other ones, but you can see it's just broken through its 200-day moving average. This isn't as clear, and the pattern's not as clear, so that's what kind of worries me about it. I think there's got a possible drop to around 37.53, so there's not a lot of profit in it either. That's what kind of, so I'd probably just keep this on a watch list, but they report on November 5th. So we've probably got some time on that one. And last but not least, MD. These guys have got some decent insider selling, and you can see this is again a downward channel. So downward channels usually revert to the upside. So I'll be watching this one tomorrow, but they report on October 29th. So what I was looking at was the February $70 puts at $3.10. But these are a lot of so here's a mix of some longer term potential plays as well as some earnings plays. Again, they're all on the short side, so I by no means would go out and go and put 10 grand in each position. I might go through a couple $100 in each put and to see which ones pan out. So I wouldn't just go with one. I'd go with a few myself, and but reduce split my normal capital I put into one position over several. And then just have my alerts all set up for the triggers that we've put down. So this could be very interesting because I've never seen markets so technically strong, but yet so many stocks falling out of favor. A lot broke down today, which was very interesting to see. So that is your executive summary for tonight, and we'll keep you alerted just prior to the market open if we see anything really substantial, or during the first half hour, anything really substantial that to note. Again, we'll try to get these summaries out to you a little bit earlier, closer to the early afternoon Pacific time. So look for that tomorrow. In the meantime, happy trading and good luck. Take care.